Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Tuesday, November 16th. It's 6:30 as I'm starting the video. And as always, run your player at 1.25x or faster to plow through the material. This morning, I spent some time on the rising dollar, impacts it could have globally. I mean, they don't call it a dollar wrecking ball for nothing. So I'm going to get into that on the charts here. Taking a quick look at futures, the thing that jumps out this morning is the crypto complex is taking a bloodbath. Bitcoin's off 5.5%. No catalyst. I just think it's par for the course and regular volatility almost. It can go up or down seemingly 5% for no reason at all. Oil and gold are both up 0.5%. Nat gas is up 3%. Over on macro, we've got retail sales this morning, industrial production. A lot of people are going to be looking at both of those numbers. We've got a housing number, and we've also got Rivian options that are supposedly opening today on the new electric car maker. Lucid also had earnings last night. It had a really good opening pop, but they faded most of that after hours. So if you're interested in a post earnings trade, there's Lucid there for you this morning. Over on the earnings front, we've had Walmart and Home Depot already report this morning. Both of them, I didn't look at the numbers carefully or really at all, but the price reaction for both have been muted, so no real moonshots or craters there. So we'll be able to watch that as the regular session opens. Today, I didn't really see, after that, I didn't really see a whole lot for after hours today, so kind of a slow day as far as marquee names go. Tomorrow, though, before the bell, we've got Target, Baidu, TJX, Lowe's, and Bilibili. So if I'm going to be watching the options order flow today, and if I see anything like, oh my God, jump out, I'll certainly let you know. But you actually may even see a Lowe's move based on Home Depot earnings this morning. So there may be a little active intraday trade there for you to take advantage of if you're motivated to do that. Otherwise, if you're long those names that are reporting tomorrow, just be aware that don't lose track of the earnings is what I'm trying to say. If you're prepared to undertake that volatility, and then stay long. If you're take more of a view that it's kind of a dart throw, then exit your position and pick it up after the dust settles after earnings. So let's dive into the charts. It was kind of a slow day yesterday. Of course, there's always trades going on here and there, but for the most part, the indexes and FATMAAN names were pretty much unchanged. We'll, of course, look at the detail. The thing I wanted to point out this morning on the US dollar, I have zoomed out to the weekly chart, and what looks like a jumbled mess on a daily chart can become very clear on a weekly chart, and that's a tip for you guys that are trading. Always go out, zoom out at least a time frame to get an idea what's going on from a bigger picture perspective. So for instance, if you're trading an hourly chart, you'd go out to the daily chart. You'll get a lot better perspective on are you trading with the trend or against the trend. But here on the weekly USD chart, you can see we put in a double bottom low back in June, and we measured the peak of the structure here at about 5%. And then when price took out that level then that triggers the double bottom structure and gives you the ability to mark a measured move, which I've done, which is up here at 98.5. And you can see here that just this week we have, well, last week we emerged from this little consolidation area where we have spent 6 weeks. We popped above that, and then with a strong candle, and then this week we've actually emerged above 95, closing near the highs of the day at 95.40. And you can see from the chart that the next real level of resistance is all the way up here near, let's call it 97.75, 98 area. So, that could have some big ramifications globally. And I think it's something the FOMC really doesn't want to see, as far as, EEM has a lot of dollar denominated debt that becomes harder to repay. You'll remember back in early 2020, with the strong dollar, you couldn't go 2 days without somebody in the media telling you that there's 17 trillion in US dollar denominated debt globally that those emerging economies have a hard time paying if every month the price goes up with a rising dollar. So globally, it's better if the dollar is either weak or at the very least just contained and stable. And also, just generally speaking, the traditional view is that a rising dollar is bearish precious metals, bearish oil, bearish the commodity complex. Why? Because all commodities are settled in dollars. So if your dollars are getting more valuable, you need less of them to pay for a given unit of commodities. But we haven't seen that yet. We've had rising copper, we've had rising gold, we've had rising oil, and really any commodity you can point at has been in a rising trend. So for those of us that are long commodities, we've got to keep a sharp eye on the dollar to see if it starts having a material impact on slowing down commodities. And if it doesn't, that just speaks to added strength in the commodity and precious metal segment, because it is going to be a headwind. It's just, is the demand, because of inflation and pickup in economic activity, going to override any headwinds from the dollar? And then, of course, if there's some point where the dollar starts rolling over again, then it's going to be a tailwind. So it could be even, afterburners or a booster shot after a rise that will continue to keep the trend going. So keep an eye on it. Yields continue to rise. We're pushing up towards the highs up here around 6.4%. You can see the highs were 1.67 here, and then over here I think we reached a high of 1.75% way back when in the spring. So here's our next level of resistance at 1.64, 1.65%. Watch for a potential move above that. And then, of course, if yields are rising, TLT is falling. Those in the bond trade got that break of the 200 yesterday. So now your next level of interest, even if you're, I'll just say, late to the party. I mean, if you didn't short it here and you didn't short it here, then your next spot is 145. And I wouldn't be surprised if we get that little move we always talk about, a little bump back to 146. And if you got that, and you were motivated to short TLT in the belief that yields are going to continue to rise, then shorting up against this resistance level at 146 and the 200 would certainly be very objective. Not a promise that it works, but a promise that that is a very objective spot. And then you could set your stop just above and then look for the follow-up move down. And you get a break of 145. It's pretty clear that you get a move into 143, and then basically with every break, if you got it, you can look for a $2 move down. And then if we were to break below 141, that would create a lot of turbulence in the market, as bonds would more or less break the prior lows, and then you'd be down in the high 130s if these lows were to break. VIX just in the middle of the range. Going to skip the oscillators. Nothing happening at all. Let's jump up to SPY 2-hour, and really nothing at all happened here yesterday. We had a strong open, but unfortunately they faded that. So I think today we'll see it better on the 30-minute chart. Here was that little strong open or fake opening move. You popped up here to 468.50, which was rejected, and then got slammed down, filled the opening gap, and came back into 466, which held the whole day. And then we kind of finished, hard to say on a high note. We were up 16 cents, but we had a good final bar there, up $1 or $1.50. So today, pretty simple, I think. As long as it holds 466, I think the bulls can stay long. I would be pretty concerned if that were to break. In fact, I think if you got a break below 466, probably going to get a move down to 464, because there's not going to be a lot of technical support down here. So I would key off of 466 pretty closely. And remember, this week is November options expiration on Friday. You should have that in your narrative, that it doesn't always hold true, but monthly OPEX there's usually a bullish tilt to it. And then the week afterwards, there's usually a volatile tilt to it, where the gamma and all those options roll off, where price is a lot more easily move around after an options expiration than just before it. So I'd maintain a bullish bias, even though Friday and Monday weren't particularly hot. We are coming off a corrective period, and we have broken the trend, and now we're above support. So as long as that holds, I want to lean bullish. And then if you were to get a break above 468.50, then things would get a lot easier to the upside. Same kind of thoughts on the Qs. We had a little gap open. They filled that right away, and then the rest of the day was mostly nothingness. I still maintain that you want to lean bullish at this point, long against 394. A break above 396 would be really helpful. That would open the door towards 399. And then below 394, you've got to keep the bottom of the channel here in focus. We had a touch, what was that, Wednesday Wednesday of last week, we had a reach down and then gap up Thursday, kind of faded that and filled that gap. And then Friday we had a big day, impulsive up day. And then yesterday was what yesterday was. So I think 394 is your number on any kind of downside break. You want to contain at 392, and a break above 392, you're probably going to come back in here to 390 or a little bit below before that support steps in. IWM was disappointing. Had a fake move above 240, which they faded, and they slammed it back down to 238. So it was really, really soggy yesterday. The one good thing is that you've got this PPO reset going on. If we were to remember that classic look that we always say is positive, the momentum reset, where you come back to the zero line, the curves flatten out, and then you get a bull cross for a reacceleration to the upside. Now, we haven't really started flattening out yet, so it's a little early to call, but we do have the zero line coming in as support here soon on momentum. But for today, 238 has to hold, or we're going to come back down here and tag this 236.5 level. So I think, just looking at levels, you want to have 238 hold. If price pulled in this morning to 238 and it held, and you wanted to be long, I think you can be long there with a little stop below. And then your overhead resistances are 239 and 240. And I just wanted to point out, and we've had a lot of these lately. We saw it in Tesla. I pointed it out the other day. Yesterday's fake breakout. So here we are in this consolidation range. Yesterday, we had a big, what looked like a legitimate power move outside of the consolidation range. We pop up strong, up, $1.50, whatever it was, and then they brought it back down, back inside the range. And put this note on a post-it note or commit it to memory. Whenever you break out of a range, especially impulsively, and then come back into the range, 99 times out of 100, that's going to be bearish. And the target becomes the bottom of the range, which we got almost immediately right back down to 239. And then that broke and you went to 238. And I think it's, again, instructive from a technical analysis standpoint. What was the width of the trading range? It was $1. It was from 239 to 240. So your first break, your target was 239. You got it. And then when you got the break at 239, your measured move was $1 because that was the width of the trading range. Plus, you had support from back here. You can see that support at 238 and the large volume over price bar. So once you lost 239, there were a lot of signals there that would point you to 238 being a support level. I want to welcome any new visitors to the channel. I really appreciate your time this morning. I truly believe that you can get value out of the channel, especially if you're one that appreciates technical levels and likes to trade against them. Pick very objective entries and exits based on the levels. I think I can do that for you. I think I'm good at it. And if you come to trust my levels and then work on your execution skills, I think you'll become a better trader. So I'd appreciate it if you hit the subscribe button and the alarm bell and the thumbs up. let other people know that you find value in the channel. Then if you want to go the extra mile, over in the show notes, there's a link to the blog site where you can register for all my content with a simple email address that you drop in, and then you'll get all my content morning, noon, and night, wherever I may publish something, mostly during the day with market observations and trade ideas. So let's look at Facebook. Friday, monster move, consolidated the rest of the day, had a good close, and then Monday morning, big monster candle up to 354, and then pulled back the rest of the day. When I see a monster candle like this, that especially that I missed, I will put the fib retracements on it just to look for where is that half back and where does the technical support lie. And you can see in this instance that the 50% half back aligned really, really well with 346, which was technical support back here. So if you wanted to be long Facebook, that would have been a good place to pick it off, because you did have a 50% pullback of this move that reached back to touch 346 at least a couple times. And I wanted to show you that there may have been a reason for that pullback, and that reason was this gap right here. We had a reach into the gap, and then it came back and closed just below. So if you were looking for let's say you're out right now, you can alarm this gap right here at, let's call it 349.50. And then you get a move above that. You can get long and look for a gap fill up towards 357.50. So, there is a technical objective there to go ahead and fill this gap, just like we filled the gap down here below. Apple had one of those more or less a fake move, like we were just talking about. Had a big strong first candle up up a couple bucks up to 152, and then they faded it, and then came back right to the open, and so it ended up being a nothing day. But if you were trying to actively trade that, there was probably a trade to make. If you recognize that there was a fade going on, you could have got that, but that would have been frustrating if you caught it fairly early, got long expecting this gap to fill, and then they fell short and reversed it. You either would have been stopped out or got out with a small profit, but still that would have been fairly disappointing. Tesla had some interesting action yesterday. From what I understand, Elon sold another, 980 million in stock. Here's the 60-minute chart. We were up here, and then we lost that 1020 area. Came down to this 980 area where we had a level. And then we got a strong bar in the afternoon, and even a move back up into the range that was ultimately faded. But I wanted to show you the daily chart, which is right here. And whenever you're trading a time frame, let's just say the 60-minute they were just looking at, Remember, we said to go back and look at a higher time frame, and here's an example why. Because your levels on your daily chart will always be more important than your levels on a 60-minute chart. The higher the time frame, the higher the importance of levels and your technical signals. So we knew we had a large volume over price bar here on the daily that came right in at that round number of 1,000. And so yesterday we had a look below that failed, that they bought up, and we had a number of guys in the trading room that were focused on that. So here's your break below 1,000, and then you got down to 980, and you had 3 hours where the bears could not break it. That is a cue to you to that you can be long there with a stop just below, and then you got a big impulsive move higher. You could have had a technical buy at 1,000 as it recaptured that level, or you could have gotten long against 980, and then you actually got a move above 1020. So today, if you get a break above 1020, I think you can be long, and then look for 1040 and then 1080 to the upside. But watch that Elon guy. He may have more stock to sell. So I don't know if he's waiting for these pops to sell into or what he's doing, but always honor your stops. Microsoft soft ran into trouble there at 337.50. I think that remains your resistance, and 335 is your support on that. Pretty clear there. Amazon, big opening move that they faded back below this gap that I've held in place. I mean, it's been filled, but price has a muscle memory, and you can see that once it went back up to the top, was rejected, came back down below, and could not get back above this 35.50 area. And I think that's your pivot for today. So you can be long against 35.50 and then look for a move back up to 3600. Google, nothing, no changes. 29.65 is your pivot, and you can look for a move towards 3,000 if things get really bullish. You really don't want to see 29.60 break down, because then you could roll all the way back to 29.25. Netflix is building a nice flag here. You know, impulsive move, little corrective action, big impulsive move, flagging action. If you want to participate in Netflix, now I think you've got two levels that you can mark. A breakout above 682.50. I think you can be long and look for 690 for starters. Or if you got a pullback to the bottom of the flag, that would be even better, where you can get long against 675 and then look for a move not only to the back up to the top of the flag at 682.5, but also potentially get that breakout to 690, and then that would be a really nice trade. And let's finish up here with the semis. Soft day, no damage, but nothing too much on the positive side either. I think, if I'm not mistaken, I think NVIDIA might have gotten a downgrade. I'm not sure on that, but was trading kind of soft. I mean, it's been on a monster tear. It was largely responsible for this explosive move. I mean, you just don't see moves like this in a big ETF. It's got a big, outsized position with AMD and NVIDIA, and both of those were doing moonshots. So you got this big move. It's wouldn't be unusual to expect some consolidation in NVIDIA and the index in general. So if you want, you can just let this thing thrash away and alarm, let's say, either 302.50 or 303 if you like. And then if you get a breakout there, you can look forward to the next leg higher. If you want to, tactically mess around in here, that's fine. If you got a break below 299, I think you'll come back in here to fill this gap. And certainly you want to pay attention if you break this uptrend line at around 290. That would open the door to a much more substantial move down. So let's wrap it up there. Don't forget, on the blog today, talking about dollar strength, I've got a chart of copper. I've got a chart of EEM, charts of gold and the gold miners, plus a lot of those market insight graphics that I think are nice. And then we'll see how today rolls out. I hope you got value out of the video today. Hope you have a good day of trading. It's been Chris Buss with Traders Profit Compass. Talk to you next time.